Welcome to this episode of the Retirement Toolbox. I'm Scott Searles, and today we're going to break down the Big Beautiful Bill. You've probably heard of the Big Beautiful Bill, and probably most of what you heard has evolved around politics. But today we're going to break it down on what it's going to mean for retirees and people planning for retirement, and look at those key points that are going to affect your financial plan going forward. Also, we'll have some different tips and things to think about so that you can keep more money in your pocket and less in Uncle Sam's. The first thing we're going to break down is the marginal tax brackets being extended and being made permanent. Back in 2017, the Tax Cuts and Jobs Act reduced some of the marginal income tax brackets. This bill has extended and made those permanent. If they had not done that, January 1st of 2026, those brackets that were changed would have gone back up. So this is good in that it stops the taxes for the majority of Americans from increasing. I want to focus on the word permanent, though. In Washington, nothing's permanent. Every 2 years, we have a new government, and we have a $37 trillion national debt. So most likely there will be a president or Congress down the road that's going to have to increase taxes in order to pay off this national debt. Simply, the government needs more money. So permanent in Washington is not what you and I think permanent is. So all of your planning strategies where you thought taxes may go up in the future certainly are still valid, even though these tax brackets have been made permanent. Next, I want to focus on the standard deduction. So again, back in 2017, the standard deduction was implemented and increased higher. Now, the standard deduction is the amount of income that you can deduct just right away, right off the top. You used to have to itemize, collect your mortgage interest, and all this stuff in order to get as many deductions as you could. For the majority of Americans, those days are long gone because now with the higher standard deduction, most people may not have enough things to itemize to surpass that standard deduction. That has been made permanent also. But again, in Washington, nothing's permanent. We'll have a new government most likely down the road that might reduce that standard deduction or make changes to it. The next thing I want to focus on is the SALT cap. Now, you may have heard about the SALT cap. What it is it allows people to deduct their state taxes and property taxes locally off their federal tax return. Used to be limited to $10,000, but that has now been increased to $40,000. It really only benefits people that live in high tax states where they pay a lot of income taxes or property taxes. Now they can write off more of that up to that $40,000 cap. There is a phase out, though, for people once you reach $500,000 of income or more. So keep that in mind. Next, I want to talk about the senior citizen deduction. Now, you had heard this talk about there's going to be no tax on Social Security. Well, that didn't happen. Instead, what happened is your Social Security is still going to be taxed as always, but if you are 65 or older, you will get a $6,000 deduction, $12,000 for a married couple to help to pay for the taxes on the Social Security. Now, this has not been made permanent. This is in place, but it's set to expire in 2028. The next thing is talking about Roth IRA conversions. So for people that have been listening to my podcast or been listening to me for quite some time on that podcast, you know I'm a big fan of switching some of our money to tax-free and doing Roth conversions. The Big Beautiful Bill has not changed anything as far as Roth conversions go. But if tax rates go up in the future because we have to pay off this $37 trillion debt, tax-free money is going to be very valuable. If we can take taxable IRA money, convert it over time to tax-free money, let all that money grow tax-free, if tax rates go up in the future, you are not going to be affected. Plus, you pay taxes on the seed instead of the harvest. So would you rather pay taxes on $10,000 at today's lower rates or wait till that $10,000 grows up to $50,000 and pay taxes on $50,000 at what most likely will be higher tax rates in the future. It's a huge planning tool that will save you a lot of taxes over your lifetime. Plus, the added benefit that the Roth IRA will go tax-free to your children. They can keep it there for 10 years also and allow that money to continue to grow tax-free. So once you pay taxes on it now at these lower tax rates, you will never have to pay taxes on it later on down the road. So a huge planning opportunity that has not changed with the big, beautiful bill. The last major point I want to hit on is bonus depreciation for small business owners and landlords. So now, if you buy equipment in 2025 for your business, you can write off 100% and depreciation on that right away. That's a huge planning tool, but it only really applies to those business owners and landlords that are able to take advantage of that. But if you do, huge planning opportunity where you can work your tax return a little bit to take advantage of that. Now, also in the big, beautiful bill, there were some smaller things like charitable deductions. There is now a $1,000 per person above the line charitable deduction. So without itemizing, you can write off $1,000 of charitable deductions, $2,000 for a married couple. The EV tax credit has disappeared. That's no longer going to be available. There's no tax on tips. That has not been made permanent. That is going to be just there till 2028. And that's capped at $25,000. So the moral of the story of the big, beautiful bill is that it has allowed us to have these lower tax rates for a little while. And from a planning standpoint, it is a great opportunity. It's something you should take advantage of, maybe doing these Roth conversions and getting yourself in a better financial strategy. So if you have any questions or you think something like that may work for you, click the link below, schedule yourself a 15-minute phone call with me. I'll be more than happy to go over your situation, see if there's some ideas that we can add to your financial security. So until next time, thank you for watching. And remember, tip your server, not the IRS.
Investment advisory services provided by Skybox Asset Management, LLC.